everybody, welcome back to the channel. If you're new, welcome, and if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. Please make sure you like, share, and subscribe. Smash the notification bell so that you don't miss an upload every time I post a video, okay? So today we're going to be sharing, or I'm going to be sharing with you 3 dividend stocks that we're down in. So again, I like
Hopping in while I'm editing. So this video was filmed right before all of the market rally that we see right now. It was filmed about 10 days ago. So some of these positions are back in the green because the market has gone up so much, but still you will see all of these particular positions that I will show that are not doing the best. But again, if you buy and hold on what you believe in, it always works out. Back to the video.
I like doing these videos because it brings perspective to investing. Sometimes your stocks, your funds are not always up. And it's really important to make sure you believe in what you own and understand why you own it, so that when the market is not doing the best or when your position isn't doing the best, your belief in the company carries you through. Now, remember, Warren Buffett said something that I really try to hold, at the top of my brain, and it's that you are buying companies. You are buying businesses. Investing is not a game. It is not a casino. It is not something that you should kind of approach lightly. Like, you work hard for your money. You are going to a job you may not like. You may love it, but you may not like it. You are working long hours and you're trying to create something for you and your family. So you want to make sure that you approach this in that thinking of, you know what, I want to be responsible. I want to be proactive. I want to understand what I'm doing so that at the end of this, I can have a return that I am pleased with. And so when your positions are down, and we've been down, I've shared portfolio videos on this channel where we were down $22,000, $18,000 in a month, like all of our accounts down. The 401k, the HSA, the Roth, everything was down, including the taxable accounts. But holding through all of the fear and the uncertainty will get you what you want in due time. Now, remember, investing is a long game, like 5 to 7 years or longer. If you are trying to get rich quick, if you are approaching investing like trading, you're going to realize very quickly that, you can lose your capital. And I am an investor. I like focusing on buying things for the long term. If I don't like something, because again, I don't want to fall in love with anything. This is serious. We don't fall in love with this. We approach it as a business. If companies change, I will move the capital elsewhere. If I still believe in it, I will keep it there and just continue to dollar cost average until the markets come back, which they have been. November was amazing for the stock market. Many of your portfolios were probably in the green, as was ours, as was our children, and it's because we just continue to dollar cost average. So the first dividend stock that we are down in, and you're going to see it up on your screen, the first dividend stock that we are down in, and you're going to see this in our Robinhood account, you can see that we are at, $52,246. The market is open, so this number will go up and down. But again, I just wanted to show you what it was at. So we're going to come to MO. So this is ticker symbol MO for Altria. It is a tobacco and alcohol type of company. It's known as a sin stock to a lot of people. Again, I'm not the moral police. I don't come from money. I come from disenfranchised communities. Grew up poor, okay? So I want to make sure that, we are investing and we are teaching other people how to invest their money so that they can grow their wealth. So right now, Altria is at $41 and 41 cents. Again, the market is open. So you can see we have 110 shares, but our average cost, which means how much our shares are worth, is about $47.25 each. So we're down in this position. You can see our market value is about $4,561.77, but our total return, so we're not even in the green on this. We are in the negatives on this. We're down a whopping 41%, which is kind of crazy. But again, we still believe in this. It's having a rough patch right now. And so long term, we're asking ourselves, okay, Altria has been around since forever. They are a dividend aristocrat, over 25 years. I know that, and I don't smoke. That's a fun fact. I don't smoke, nor do I drink, but I know a lot of people who do. So it lets me know that there's still a clientele for that. I mean, people make decisions. They have their own reasons why they make choices. As an investor, I'm looking to see where are people spending money? Where is there an opportunity for my husband and I to put our capital in a business that is supplying its customers? Again, a lot of people smoke, drink, they do it because they like it or it calms their nerves. And so as an investor, I put money in. So while it's at a low right now and it's down, we're down about $646. Long term, we do believe in it, and we have 110 shares, and they pay a really, really, really great dividend. I think their next dividend payout is in December. Into December, sometime in December, I believe, or the ex-dividend date is. So if you are into this, make sure you remember that ex-dividend dates, because that's important if you're trying to, get like a dividend or, something like that. Next is Realty Income now. Realty Income has been suffering all year because of the higher interest rate. So again, Realty Income, something's in my eye. Realty Income is a REIT. So that is a real estate investment trust. These are investment firms that pull capital from investors and they buy real estate. A lot of times it could be commercial. Sometimes it's residential, like homes and apartment buildings. Other times it could be like senior places, hospitals, farmland is considered real estate. I mean, when it comes to REITs, there's a lot. And I did make a video talking about REITs. So make sure you check that out. I'll try to have it somewhere up on the screen, but Realty Income is my favorite REIT only because it is like the king when it comes to the dividend REITs. It has been around for over, in terms of like publicly traded, since 94. It's been in business since the 60s. It's known as the monthly dividend company. They are consistent with their dividend and they grow their dividend through the muck, through the mire. I really do believe in it. We have our capital here and we're just going to continue to buy, but it doesn't mean that it's not going to be any lows. And I want you guys to remember this. Nothing in the market is immune to downturns. SCHD has been having a tough year. It's coming back, but it was really struggling between February and November 1st. I mean, in the tank. So you have to believe in what you buy and continue to invest in it. And remember, you don't have to invest in something because someone else is investing in something, and you don't have to sell something because someone else sells it. Personal finance is personal. When you look up your account, it has your name on it, not my name or anyone else's name that you may come across. So it's important to believe in what you own because it's your hard-earned money. So with Realty Income and Robinhood, we have 151.23 shares. We are down about 11.45%. So again, I'm showing you this, okay? I'm not just talking about it. I'm showing you it so that you can see, okay, if you believe in what you own long term, I believe in Realty Income, and I'm buying it at a discount. So we're down about $1,000, $1,074. Our current market value, or how much our shares are worth, is about $8,300, and our average cost of our shares is about $62. So we're still down, but I've been dollar cost averaging into this every single month. So we are buying some of our shares at a discount. That's how I'm looking at it. If I'm going into a store, I don't want to buy a MacBook at full price or overpriced. I'm going in there trying to find a discount, or can you give me something for free with it? I want to sell. I want to bargain. So that's how I'm looking at it when it comes to investing. Just assets on sale. These billion-dollar companies on sale, some trillion in Apple's case on sale. So why would I run away from that? If I want a discount on like a product or a service, I should want a discount on assets. So again, just continue to dollar cost average, and guess what? We're still getting those dividends paid to us while we wait for those positions to come back. And then QYLD as well. So this is a covered call ETF. So for those of you who are interested in doing that and you don't want to do the work, you want to leave it up to professional fund managers who know how to do this and they can consume themselves with this. I like QYLD. It has not really caused us too much problems, but we are down a little bit. And this, we're down only 1%. 1%. Okay, you can see our average market value is $5,196. We have 303 shares. I'm thinking our next goal will probably be about 500 shares or so in this particular ETF. And it is an ETF, which I also love, as well as not like a single stock. It's a fund. And we're down about $53. So not too bad. We get that dividend reinvested every single month as well. And it helps to buy us, like shares at at a discount because this is what we all are doing this for. And so those are just some 3 that we're still down in, because again, one thing I love about our portfolio that we've crafted is that our portfolio keeps us during all of the volatile moments in the market, right? You don't like, I like diversification. I need to have more than 1 position, 2 positions, 3 positions, even if they're all funds. I need to be diversified, because if I have VTI and VOO, I'm not really diversified. I just have 2 different ETFs because they overlap. If you look at the top 10 positions in both, let's for example, VTI and VOO, it's the same thing. So I'm not really diversified in that aspect, which is why I like SCHD, because it's not so tech heavy. We have a lot of tech with individual stocks and inside of funds. Made us a lot of money over the years, but that's not, they're all, that's more than that to the market, like healthcare, financials, real estate, energy, utilities, materials. This is all, like, these are all things that are also great. But, you know, tech gets all of the attention because, you know, it's the sexy thing right now. Apple, Tesla, Amazon, Microsoft, Google, those are like the sexy things. Meta. But I like Johnson & Johnson. I like Procter & Gamble as well. I like ExxonMobil and BP. I like Realty Income. So I just wanted to share with you 3 stocks that we're down in. But guess what? We're going to continue the dollar cost average, and we're just going to wait until the growth comes. And while we wait, that dividend always pays us out. So again, guys, I hope that you enjoyed today's video. Let me know down below 1 position you're still down in, and if you're going to sell it or continue to hold and dollar cost average. Again, guys, thank you so much for watching. Please make sure you like this video, subscribe, smash the notification bell, and leave me a comment because it helps with the engagement, and YouTube really loves that. We're making our way towards 20,000 subscribers, and I cannot get there without you guys. Again, thank you so much. And until next time, I'll see y'all in the next one. Bye-bye for now.